Hey everybody, it's Pete. Good morning. Welcome to Stock Trading Pro. Today we're going to talk about the Fed minutes. We're going to talk about earnings. We have a lot of the best stock picks that I plan to buy today. It's really just a question of how the market unfolds after the open today. Yesterday, the Fed minutes came out and kind of ignited the market just simply because they're pushing it out again and having a conversation about not yet and not going to tell you how many we're going to raise, which is kind of interesting. So I think personally, as an active trader who's been doing this for 22 years, I think that the fact that they keep telling us not yet, but they're telling us they're definitely doing it. The Fed is literally saying we are raising rates, but we aren't doing it now, which has the market now shifted into such short-term mode where we know it's coming and the market rallies anyway after that news, when what we should be seeing is the fact that they are going to raise, which is between quantitative easing out the window and interest rate rises. Seeing a rally after that's a little bit unusual, which is actually why I want to recommend this book. It's, I get book recommendations all the time. People asking me what's on the bookshelf in the back there and which ones have impacted you the most. This particular book it goes over each decade by decade. And I actually think it's one of the most interesting books to read as an active trader, simply because we are talking about that decade and what the economy was like, and then which stocks were the best to trade during that decade and year by year. So here's the book. It's How Legendary Traders Made Millions by John Boyk. It's actually a fascinating book because it's about what was going on in the economy, the leading sectors in the economy at that time, and then the individual groups in that time, decade by decade, going all the way back to the early 1900s, starting with Jesse Livermore. Now, why is that important? Why am I bringing that up right now? Well, we're looking at NVIDIA stock reporting earnings after hours. A lot of people are wondering why NVIDIA stock went down when they beat guidance. Everything looked absolutely amazing. That's what we're going to talk about today and how that applies. Because what I do every day is I talk about market stocks. I talk about the leaders. I talk about stocks that have institutional attention. A lot of the time that we talk about we're buying stocks, we're looking for stocks that have order flow, which means that smart money, deep pockets are involved. So there's volume, there's volatility, and there's predictability on those kind of stocks. So we're going to jump right over into the Fed minutes. We're going to talk about NVIDIA, and we're going to make a list of other stocks that have reported earnings recently, and UPST being one of them. So NVIDIA stock joining UPST, where there's some really tradable opportunities, even with these giant bullish gaps. Yesterday, Upstart was the stock that we mentioned yesterday morning, had a giant gap. We gave you the exact price to be looking to trade it 2 hours before the market. We talked about it, hit that price, stayed above that price the entire day, and it turned into some really good short-term trading. Now we're looking to see if it becomes a little bit longer swing trade. So stick around. We're going to be back in just 1 second. Okay, so thank you. Everything we talk about here is for educational purposes only. It's up to you to make that final decision. We want to go right over into what's going on in the market today, give you some stock market news. Obviously, the Fed and the Fed hike is what everybody was waiting on yesterday. In case you don't know, yesterday afternoon at 2 o'clock in the afternoon, the Fed minutes came out. And the Fed minutes are essentially the transcriptions of what they talked about the last time they decided to raise rates, not raise rates, and handle that. So essentially, the last FOMC meeting, they decided not yet. We're definitely doing it, not yet. And the market reacted. Market reacted exactly the same way again yesterday, where they saw it as, okay, we're not wed to a particular pace of rate hike. So what does that mean, and why did the market react the way it did? Which actually, if you didn't happen to be in the market yesterday, let's actually take a look at that just to give you an idea. We'll go to the SPY on the 5-minute chart. And to give you an idea of what it looks like after the report. So you can see right here at 2 o'clock, this is what the market did after hours. So you could be like, but I'm not a day trader. I don't care about any of that. It doesn't make a difference, because this is the big picture of the market and how the market's reacting now as soon as the news comes out. What's interesting is they really didn't say anything different, but what they did affirm was we're not doing it now. So that opens the door for the possibility of the next meeting where they're not going to do anything. Most people have been talking about, are they going to raise 4 times this year, 5 times, or are they going to make it 25 basis points, 50 basis points, and start out that way, which a lot of people think would shock the market. The market reacted in a bullish way. The stock market reacted in a bullish way yesterday because they are again saying, we're not saying how heavy we're going to do it. And short term, that was perceived as good news. So how does that translate into some ideas? Well, we're going to work our way over into NVIDIA. And actually, a lot of people wondering why NVIDIA traded lower. So you can see the chip maker seeing extremely high interest on Wall Street bets today. This is after earnings. Now, what I want to point out is earnings were amazing. Everything that they looked to do were just absolutely amazing. Revenue beat. So we'll go right down the line because this is where a lot of stock traders get confused. Like, I don't understand. Revenue beat. Great. The earnings beat. Net profits beat. Earnings per share. Everything was awesome, right? But the stock still went down anyway. And if you are a regular viewer of this channel, which I hope you are, we talk about the expectations. That's what they're looking for. Because remember, we're not buying what they did. We're buying where they're going. And the expectation of what's supposed to happen is really we're buying tomorrow's cash flows, not today's. And here's the key that we want to take a look at. And if we work our way all the way to right here, that's the big part of the conversation we want to take a look at. Let me zoom that in a little bit for you. Right here. The stock fell in after hours, apparently due to the slowdown in year-over-year revenue growth. So when you are looking at earnings and looking to try and translate what's going on with earnings report, we're doing this with NVIDIA stock right now. The company's forecast for flat margins in the first quarter. So it's growth and margins that matter. So that's something you want to write down. And actually, again, getting into this book, it's pretty interesting because they go decade by decade, company by company, leading that decade and why. And what we're talking about now is revenue growth. So how does that translate into what we're going to be talking about today? I want to be talking about opportunities to be buying stocks that have just recently reported earnings. Because if we go back over to the market, I want to point this out. We're going to zoom this out on a little bit higher time frame. A lot of people, correctly so, are talking about how the market is kind of channeling. It's kind of not really obvious to the long side or the bearish side, and it's hard to have conviction. So when the market is not obvious, the way it's not right now, you can see that the SPY, the S&P 500, is in a giant pennant pattern right now. And whether you know that pattern or not is not really, it doesn't really matter for this moment because I'm going to explain what it means. So using technical analysis, you get big volatility that just keeps consolidating. And a lot of people know that as a wedge or a pennant pattern. But what it really means and what it really means to us is that the edge is small. And what we're looking for is once this consolidation breaks out of that, we call it letting the market tip its hand, then we have some opportunities to get involved. Now, there's a lot of setup for the ideas that we're going to talk about today. The whole point I'm making is we look at the stock market power pyramid, and the bottom is what are the three major indices doing? And right now, they're bearish to neutral at best. You work your way up that list, and we're going to take a look at that now. You get into the sectors, and you can see over one day, over 1 week, and over 1 month, there isn't really a dominant sector. Energy was for a while, but it's kind of cooled off a little bit. Obviously, the stuff that's going on in Russia and the Ukraine is affecting that pretty dramatically. A few basic material stocks have been exploding to the upside, Alcoa, NUE, specifically STLD and X. But across the board, we're not seeing anything where green across the across multiple timeframes. So that means right now, that means we got to drill a little bit deeper into a catalyst specific reason to put on trades where we are accepting risk because we're expecting follow through because of the catalyst. So we're going to translate that over into the catalyst of NVIDIA right now. And I have a list of about 8 other stocks we're going to take a look at for earnings recently. And the fact that they're in play, they're on my radar. And actually PLTR just reported a couple of minutes, which I know that was a pretty popular stock as well. So we're going to go through the list of stocks, but I want to give you 2 ideas that I think are probably at the top of my list today. Even though the market's set to open lower, futures are trading lower right now. These 2 stocks are resting right at levels that if they take off, they should be pretty good opportunities to see follow through. Okay. So those 2 stocks that I'm talking about right now are Zillow. And you can see here, obviously earnings came out, bullish gap here, pushing up, paused right here and resting right at a breakout level. Now, if you don't know the story behind Zillow, they decided to stop flipping houses and just do what they do well. And since now they're cleaning out that inventory and getting back to what they did and did well and what was their specialty. That's the first one. The second one is Micron, which is trading a little bit lower right now, but you can see that it keeps getting up to this 96 level, hovering right below 96. Those are the top 2 stocks that are going to be in my game plan. I have a bigger list of stocks we're going to talk about now. Those are the top 2 that I'm going to be looking at heading into today. Those are the top 2 stocks I'm going to be looking to buy. But if we get into NVIDIA, and we're going to get through the bigger list of ideas, You can see that we've been working the stock. There's been selling. But now recently, the stock has just pretty much been consolidating for a couple of weeks. And you can see it's actually down 257 and change. So really what's going on here is we are right there and right here. We're kind of just stuck in this 2-week box. So you know that when we draw our box, we look for an obvious move. We look for when it breaks the box, and now we're kind of stuck in the box. So I want to come back on the screen. This is probably one of the most important things you could learn as a trader, is recognizing what is the right price. The right price means the stock is not moving. The right price means that it's churning along within that box in a certain window. During those moments of consolidation, if you're actively trading those stocks and there is not a consensus where somebody's willing to pay higher prices, and we see that in what we call the markup, or somebody's dumping supply in the market where it just keeps pushing down and pausing, unless you're in one of those two instances, you're going to kind of be beating your head against the wall because there isn't a definitive edge. There isn't a dominant player doing something in that stock. And it really comes down to they are taking action and they're moving the stock. So right now, NVIDIA, as of this moment, is stuck in the middle of this box. However, if you are an active day trader, even while it's in this box, you could drop down to a lower time frame and find some opportunities. But from a swing trading perspective, for me, I am not buying NVIDIA stock as a swing trade. But because of the volatility, because of the liquidity the stock has every day, and because of the catalyst, then I am looking to actively trade it like I have done for a lot of these other stocks that I'm about to mention that have had earnings. So what I mean by that is if you are looking on the day trading side, you could drop down to have the hourly time frame, and you can see on the bullish side, you had 2 days of buying. On the bearish side, you had 2 days of selling. You had a neutral day that found support. You had a day of buying into earnings. You had the day of earnings. There was a couple of hours. So as an active trader, it's important that you understand what is the objective, what is the time frame that you plan to trade. And if we zoom out again on the bigger time frame, if you're looking to swing trade NVIDIA, you can see that there really isn't an edge until it gets above this level, which is around the 266 level. So if I'm looking to be a swing trader of NVIDIA and I'm looking for this earning catalyst to give me a reason to get in, I personally now as a swing trade need to see it get out of that 266 level. And we get a lot of questions about, well, if you like it there, why don't you just buy it now to get a better price? And the answer is simple. I'm not going to fight where sellers keep pushing it down. Why would I buy where there's supply? I want to buy when that demand finally gets through that level, and then I start to allocate shares. My goal is to see my account grow and my money to keep moving in that direction. I only want to put on trades where I think that there's a really good chance, a high probability of following through. NVIDIA has a catalyst right now, but it also has sellers, and it's stuck in this box. So I'm going to allocate more money on swing trades to different ideas that have room to go, which I'm going to talk about in a second, and day trade NVIDIA right now because of the volume and because of the liquidity. If it breaks out and gets above that 266, 267 level, my alarm will trigger, and then I'll look for a trade. And the next level I'll probably be looking for is up in this area right around 300. So we have a big list of other stocks that have had earnings recently that have been very active, and a couple of other ones that just hit that scale where more than double normal volume, which is one of the scans we run every day. And what I want to show you, we're going to start out with first is TTD, which on the surface might not look like the most incredible price action. However, when you're looking at what's going on during the day, we talk about certain patterns, and this is what this stock did yesterday. Okay, this was an $11 move off the lows in the context of getting back up to this breakout level. So as you can see how we're working this chart right now, and as we broke this downtrend right here, this bearish order flow right at this level, we actually confirmed it here. We rallied past this, paused here, and now rallied right back up to the high. So really what I'm looking for in TTD is I'm looking for follow through off of yesterday's bullish U-turn. Now here's where you need to really dive in and make sure that you're doing deeper analysis than just looking at the charts. And this is kind of important. We work our way over to one of the most powerful indicators possible is volume. Volume just exploded on this stock when it reversed. It's down a little bit right now. So we are now looking for it to get out of this 5-day box, see some follow through, and then we're looking for 100 as the next level. This stock split last year was in the $600 range and really hasn't traded that powerfully. Before the stock split, it was amazing. I'm looking for that kind of price action to come back in. So if TTD takes out yesterday's high and we get some follow through, then I'm looking for $100 to be the next level where I plan on having as my initial profit target. Now we're going to shift over into some stocks that have had earnings lately and have been pretty active. And those stocks, remember, we go back to what we talked about before, because the market is a little bit less obvious right now. I'm diving a little bit deeper into a different type of catalyst, which is sector rotation and then earnings within those sectors. So at the top of the list right now that I have is yesterday's stock, which was UPST. UPST yesterday, obviously in bearish order flow, but we talked about trading it and it needed to stay above the main price. So if you remember yesterday's call, we talked about once it gaps up from here to here, we drew that line and we said, this is what we're looking for as far as a new opportunity. If it's above that line, perfect. So we're talking about 136 all the way up to 149. So let's put that in context. We talked about that trade at UPST pre-market on one of our live streams, literally yesterday morning. We said, this is the bullish gap. Do not put limits on what the stock can do. The stock price could go above, get to that level and pull back and you leave it alone. You can get to that level, stay there. And as long as it's above that level with the bullish catalyst coming off of the news, then look for follow through. We had quite a few members in our bootcamp community that took advantage of this yesterday. This was a $13 move after the bullish gap, and it finished the day up 35%. So this is what's so important about understanding order flow and understanding reading the tape. Order flow tells you that something's in play. Reading the tape tells you that there's still room to go and it's still valid, because that's one of the biggest questions we get is, how do I know when it's reversing? Once you understand how to read the tape and you understand that's the significant price that I'm looking for, you're not confused anymore. You know exactly what price has to hit to be valid, to continue to look for a trade, and then obviously have your entry signals, or you know the exact price that tells you it's no longer valid. Don't even look for an entry and go to look for a different idea. This is a pretty interesting one in UPST yesterday, because we had a lot of people on the chat yesterday talking about, but it's gone too far. It didn't, and it kept going. So don't put limits on what's possible. You have to have an initial target to at least justify the risk, but that's why we use the profit maximizer, because after that, once it hits that level and hits what we think it normally does, then you have to shift into a different mode and see how much you could possibly get on the trade. That one trade yesterday could have made your entire week, if not month, and it's only $130 stock, 148 now, 150. So it's actually very realistic that you could have had a decent amount of shares. So we're going to work our way over into some other ideas on the swing trading side of things. Obviously, DoorDash came out last night, and this is, again, very similar to UPST, not in bullish order flow, but you can see over here the stock is up at 117.98. That's up 24%. So it's actually right around there, around 118, give or take. So it's actually going to break this level, which is actually where the trend line is resting. So same exact thing, exactly what we did yesterday in UPST. Once this stock opens around, probably around 118, you draw your line in the sand, and now you simply look for opportunities as long as it's above that level. So the earnings catalyst is there. We also discussed this stock, ANET, recently. Yesterday, it was up 1.92%, but had a really, really nice bullish gap after earnings. This is the day, this is the earnings, and we got some follow through. So now this stock paused one day after having the bullish gap. So we're kind of getting back into where we're discussing the metaverse stocks, the infrastructure of the metaverse stocks. ANET has been one of those stocks that has been the most talked about. And if you look at the chart from a couple of months ago, it actually had a pretty good bullish run here over the period from October right through January. So ANET, metaverse, NVIDIA, metaverse, which takes us into Cisco. Cisco also reported, and that stock is also up 3% and has now broke this short-term bearish order flow, because this line is here and we're trading right around 56. So we're kind of like right up in this area now as well. Better trade is if we stay above 56. That's really the level I'm going to be watching. If we're above 56, that takes us right to this level where sellers came in. If we're above that level, I'm going to be looking for this area here as the gap fill, probably around 60. Not a monster move, but you know what? The slow dollar still is still a dollar. So whether you get 56 to 60, 56 all the way up to 64, $64 stock, maybe you size up a little bit if you get follow through. So 56 is the line in the sand that I'm looking for Cisco coming off of the earnings play and looking for follow through. Next, we're going to be looking at NET, which is a pretty interesting trade. We're actually following up on earnings over here, and you can see the stock is pushing and pausing, and now the stock is consolidated for 3 days. So what I'm really looking for now is this stock to trade above what's the level here? I'm looking for this stock to trade above 113 in order for me to start looking for a new level, because we get a lot of questions here. Which stocks meet order flow and what's the right price? Now, again, everything we do is for educational purposes. I'm telling you what I'm doing, but I'm looking at the catalyst of earnings from net to give me an opportunity to buy net above 113. And then it looks like around 140, if all things work out properly, right around that 140 level is the next level that I'm going to be watching for. AMAT also came out with earnings, and that stock is also up 2%, 144 and change. Now, what's interesting again here is you can pretty much see where has this stock been stuck in the box. Earnings accelerated, price action accelerated to the downside. Volume actually stayed pretty decent. Earnings came out, and now we are at 144 and change, which takes us outside of this box. So we're literally right there. Now, something that we talk about quite a bit is having a stock move in our particular direction and having a stock stay there is not the same thing. So when you have this big bearish order flow and a stock rallies beyond that order flow for day one, that's the first sign of a reversal. That means it should be first position size for a swing trade. So I want to separate day trading and swing trading. Day trading leverage and day trading stop losses are a lot tighter when we have these kind of activity. So you can actually trade a little bit more share size, get a little more aggressive, because you're probably trading on those micro time frames, maybe the 5-minute, the 15-minute, or the hourly time frame. So if you have discipline, share size is different. You're not trading for that big a pull, you're trading for that next move. Swing trading a stock like this, like AMAT, where it's the first time it's breaking out of this 2-month downtrend, you go in with your initial share size, looking for feedback that the buyers step back up and hold it there, and then you look for follow through. So the follow through would be the next push and the pause, and that would be when we'd be looking to add to that trade. A couple of other ones I want to talk about here today. PLTR, which I know is a very, very popular trade and a very popular stock. The stock actually reported, you can actually see it's down right now. We're getting a lot of questions about purchasing this stock right now. I understand that this stock is very polarizing. I am not doing anything in this stock right now. To me right now, I understand why it's polarizing. I understand why a lot of people like it. I understand why a lot of people love this stock and want to buy this stock. But the fact of the matter is they're selling. They're selling in the stock right now. There's bearish order flow. And until I personally see either accumulation, like we talked about yesterday in SQ stock, or I see somebody with deep pockets actually start to bid the stock up, hold it, and volume increases, I'm not doing anything in PLTR. And the earnings today have actually pushed the stock lower again. So PLTR is not on my radar, despite the fact that there's earnings. There's one other stock that I want to talk about today that has a pretty interesting conversation, which is, where the heck is it? Right here. This is a big news story. Google's going to make it harder to attract customers. It's a blow to Facebook, Meta platforms, whatever name you want to call it these days. It's still so hard not to call it Facebook. The same thing happened with Apple. Apple did this to Facebook, where they started to block on their iPhone, and now Google doing the same exact thing. That is not good news for Facebook, Meta platforms. That is actually how they make all of their money, for the most part. There's other avenues in there, but that advertising revenue is how the entire company is built. And the fact that marketers will now not also be able to track using Google Analytics, that is a big blow, a really big blow. And keep an eye on this story to unfold. If you understand short selling, if you understand buying puts, looking for stocks to go down, this is something interesting that you have to pay attention to right now. So I want to take a quick look and see how the stock is acting and the levels where the stock is acting. This is just absolutely not good news for the stock. Now, the one thing to keep an eye on here is the stock has already gone down from 330 down to 216. It's down $114 in the last 2 weeks. You don't just go out there and say, I'm going to short sell the stock and bet on it going down, because the premiums for options are probably very high simply because of the recent volatility. It's already fallen $114. For me personally, to be looking to trade this story, we're talking about the same thing we talked about NVIDIA stock and buying next quarter's earnings, buying the future earnings. We need for this to play out. This is not something that's going to happen immediately. It's going to end up playing out over time as this unfolds. So you have to make a determination. Is this a little bit longer term play, or am I going to look for this to be a active trading play where maybe it's a day trade or something much shorter term like that? So for me personally, shorting this stock, which is an advanced strategy for active traders, I'd be more inclined to be looking for this stock to pause sideways for a little bit. And as long as it pauses sideways on lighter volume, and then we see more headlines like that, the likelihood of the stock going down is actually pretty good. So it's going to be interesting to see how it unfolds. But if you didn't happen to catch that story on FB, Meta Platform Stock, you want to read that story. It's a pretty interesting one. All right. I have to head out, everybody. Have an awesome day. Thank you so much for joining me today. If you find this kind of stuff helpful, do me a favor, smash that like button, hit subscribe, and I'll speak to you soon. Take care now.